All right, all right, all right. What's going on, everybody? We're back. The guys are back from their investor
Did you just Matthew McConaughey us?
shenanigans.
All right.
Hey, man, you know it comes out, man. You know us over here in Texas. It just comes out sometimes, right? By the way, if you haven't seen the movie, you need to go see it.
Which movie?
That movie with Matthew McConaughey. Where he sits in the
been
car,
in
when he's
many
sitting in the car, he's like, all right, all right, all right.
Oh. Yeah, which one was that? I can't even remember which.
Confused is the
Dazed and Confused.
Dazed and Confused. Yes. Very good movie. Very good. Even today. So anyway. Hey, so great to have you guys back. Great to be back this week. A lot going on and yet nothing really going on, right? I mean, this is Bitcoin right now.
That was really well said, Chris. A lot going on, but nothing going on.
I mean, but it really is, right? I mean, we've got the same old right now. We got institutions continuing to buy in. We've got retail freaking out, saying that it's the end of the world. On Trading Tuesday Spaces yesterday, they brought up this thing that a lot of these large accounts are with this whole, I'm giving up on crypto now, and I'm giving up on Bitcoin now. Bitcoin's failed because blah, 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 and all this stuff. And, maybe some of it is what it is, but I think a lot of it has to do with just, you get to this point in the market, price isn't flying anywhere. What are you going to say? If you say, price is going down more, people are like, well, they're going to tune out. They're like, well, I'm going to go do something else until price comes back up. So you got to get an audience, right?
Well, there's very few times where signal and noise are the same thing. And that is the same thing. When I start hearing people say that, that's the signal that we're at the bottom. I'm serious. Like when we were on Melker's Tuesday show, I don't know if you watched the Monday, Macro Monday, but
well, I saw the part of it.
Well, you should go watch the whole thing. That whole conversation, feel the tension and the grit and the emotion that's behind everyone. When emotion is ruling markets and everyone has found themselves at the bottom of a collapse in price, you really do find out a lot about people's positioning by definition, right? And so I was at the Bitcoin Investor Week Pompliano put on in New York last week. Andrew and I were both there, and I said something from the stage that got applause. And it was, you're only upset right now if you don't have dry powder. And there's a lot of dry powder in this room. And they all kind of erupted because those guys, the institutions, the commercial buyers, they're sitting on so much cash and they're deploying it into Bitcoin. And so, it really is a tale of two cities. Like if you're on the retail side of things, you see it one way. And if you're on the commercial or, the development side of things, you see it another way. I'm more developer side than anything. I don't care about the price. I know what I own. I know what the network represents. I understand the premise, that networks have value, period. Networks have value. So networks that are the largest network that's ever been created in mankind must have a lot of value. And so you compare NVIDIA's market cap with Bitcoin's market cap, Bitcoin's a larger network than NVIDIA is. So I would anticipate, I think that's a bargain is the point. And I think a lot of people that are looking at macroeconomic factors believe Bitcoin is very inexpensive for the tool that it is in your toolbox and what you're trying to accomplish with it. And, if you look at what flight to safety traditionally looks like, it's like, when volatility hits the market and people don't know where to go and everything becomes very like a risk on asset because that volatility is running, everybody goes to gold and silver. Well, you can't even go there anymore. It's more volatile than anything. Silver had a 50% retracement in 5 days, basically. So you boil all that down and you go, okay, well, if institutions are familiar and traditionally buying and using gold and silver as those hedges, and they're failing in that regard, they can't provide the stability that they once did. Bitcoin has been much more stable than those assets with the same asymmetric opportunity in terms of price increase. So I just think we're entering into a new era where Bitcoin's going to shine, and it's going to shine as the the best risk on asset, the best anti-inflationary tool that man's ever created. It just takes time is the way I look at it.
Yeah, it doesn't happen overnight. I mean, like as you and Andrew have been saying, numerous times throughout our show's history here, Bitcoin, is kind of like the only thing where people get in there and they don't go buy it when it's on sale. They freak out, right? They wait. They want to wait. And, how does that usually turn out? I mean, history shows that doesn't turn out well, but human nature is what it is. And people continue to do what they do, right?
Well, I think a lot of people want to be in the community of Bitcoin more than they want to make money.
By the way, we have not mentioned that Tillman is beardless on this Beards of Bitcoin.
I was trying not to bring attention to it.
Yeah, he is beardless.
Well, I'll tell you all a little story since you guys are my friends. I think I was leaving for Friday on Wednesday, and I was trimming up the beard as we all do when we have to be in public. And I have a little trimmer that has a dial gauge where when you dial it to the right, whatever, your aid gets longer. And I didn't know, but I accidentally took off right there. Okay.
And then everything else had to go.
Well, no, I stood there in the mirror and I was like, okay, what style can I pull off without this piece? And it was like Chapman or Hitler. So I had to shave the whole thing. So, it was
probably the better choice. Unfortunately for beards and Bitcoin, it doesn't really
it's
work.
growing back quickly. Listen, I just take solace in the fact that I look a lot better than Andrew did. So, it's
when did it become a personal grooming seminar?
It was when I shaved mine, it was a jump scare across the board. The first time seeing me, people were.
Well, you've got quite the, it's pretty long there. I typically have a little bit shorter than you, but it was a good mix up. I like to throw myself off my game a little bit and give myself some challenges. So it was good.
Well, I saw your video there on X, and that was when I first saw it. I was like, what's he doing over there?
Andrew saw me out of the elevator when I got to New York, and he goes, "Oh, we're screwed." Samson's cut his hair. We've lost our power.
So
go ahead.
It's never lost on me that we are, again, sentiment, but also, sentiment at the same time is often reality, whether it's the stock market or crypto. That we are in the midst of a real bear market, crypto winter. Even the Bitwise guys are, those are the talking points at 67K, man.
Yeah.
Like it never ceases to amaze me that a previous cycle's high is often the next cycle's bear market, which just means that at some point in the near to midterm, future will be meaningfully higher than we are now, because that's just what Bitcoin does. And it is, taking a look at 13Fs over the course of the last couple of weeks.
Yeah.
My goodness, you can't find an institution that sold into the downturn in Q4. Can't find one. All of them either most of them bought more, and then you had others that kind of stood back. Put your finger down, Chris.
You had Harvard.
Put your finger down.
You had Harvard.
Harvard isn't a company.
Sorry. Yeah.
Right,
Harvard
but it was one of the big sellers.
Yeah.
Cool. Listen, they probably did it just because Trump owns some. So I don't take any stock in what Harvard does. Harvard it makes illogical decisions. They get money handed to them, and they build a statue and call it even. So, there's no real business there.
Yeah. So
but just in case anybody brought it up, I wanted to make sure we.
On top of that, well, thanks for the
Thanks for the interruption and the worthless comment, Chris.
Yeah,
that was
I was going somewhere. With my goodness. So the other thing that stands out to me is what Jeff Park pointed out yesterday. that you have capital moving from spots that they have to basically shadow themselves to get access to Bitcoin.
Yeah.
And even they're buying during the dips, right?
Are you talking about the China?
Yeah, the
entity that cloaked itself and all sorts of stuff, so they can get
exposure,
access, and exposure to the asset again long term.
Which think about this, like when we tokenized all of the equities, that it's a global market now. Like everybody talks about just the 24/7 aspect of it and what that does to it. It does a lot more than that. It allows somebody in the middle of nowhere to invest in the S&P 500 on the phone, on multiple crypto exchanges, basically from anywhere.
Yeah. So again, you have such a huge Grand Canyon-like gap between retail and institutional mindset and money. Again, we saw that at the conference last week. Conference was in New York City. The half the room would be considered institutional type of investors. The others are high net worth to ultra high net worth folks. And the sentiment it was like we were in an alternate universe. There was no negative sentiment. There was a constant waft of, a smell of opportunity. This is the time where you double down. This is the time where you allocate more. This is the time
I think those people are looking for answers, right? They're at the conference going, how do I allocate? When do I allocate? There's all these things that, are pressing issues once you consider allocation, right? If you're a large fund, or if you own a sizable real estate portfolio and you're going to add Bitcoin to it, like Cardone was there, it's one of those things where you have to start. You've been put in a position where you can't ignore adding Bitcoin, but at the same time, you've never done it before. You don't know the risks. You don't know what any of the pitfalls look like. You're grasping for the experts to come in and help you. And that's why I think some of these meetups are so valuable, especially for TradFi, because they get to sit there and ask all the questions that they could ever come up with in one setting with a litany of experts across multiple industries, multiple companies, multiple sets of expertise. And they leave very satisfied. They leave going, wow, I got a lot of value in information out of there. I'm glad you came back, Andrew. I thought we were about to have a Macro Monday. I interrupted you and you quit and left?
No, yesterday was my son's birthday and I ordered him a bike, and so they got to deliver it. So that was the reason. No,
remember that's for him to ride, not you. Remember that.
No Macro Monday issues here. Although that was exciting on Macro Monday. I posted that I thoroughly enjoyed the Macro Monday. And I like it when people have mask off moments, right? Mask off moments, by the way, happen much more often in bear market type sentiment environments. And you saw that in that moment. We're also seeing it a little bit with what's going on with Nakamoto and everything there. Mask off moments where people, either give in to the basest version of themselves, or they prove themselves to simply be committed to the path that they're on, and no matter what's going on around them, that there's integrity and commitment and hard work still involved in the work that they're doing.
Since you mentioned Nakamoto, real quick before you go further, why don't you just go ahead? Some people here probably don't know what happened. Let them know what happened with Nakamoto.
Well, listen, Nakamoto has first and foremost, they did a reverse stock takeover pipe RTO type of transaction.
MD.
Yeah, we've talked about that on this show, that across the world of banking, investment banking, that is the lowest common denominator of a transaction that you're going to come across. Yeah. The likes of Morgan Stanley or JP Morgan or Goldman Sachs won't even sniff a transaction like that. They want nothing to do with it, right? Because it's just not viewed well across Wall Street. All right, so that's one. So they decided to do it that way. They decided to get a lot of people involved, friends and family, let's call it.
They raised $700+ million.
Yeah,
friends and family.
and they you could have got hands on initial shares at $1.25, right?
Yeah.
And they've made a lot of poor decisions ever since then. They took nearly the entirety of the capital that they initially raised and smash bought a bunch of Bitcoin. That in and of itself was a mistake. And then they've gone on sort of a spree of adjustments to their initial thesis as to why they should exist.
Well, even so much so that I think, they started off with the we're never selling Bitcoin, right? And then you saw them change that narrative, kind of months later, where they were like, well, it's all about, your MNAV. And if we can sell Bitcoin to increase our MNAV, then we will sell Bitcoin. Well, that was,
that was the first red flag, right?
That was a bit of first red flag. When I heard that, I was like, well, that's a lot different than how we started the journey off. It would be like if you got on a cruise ship to go to the Bahamas, and then the captain came on and goes, scratch the Bahamas, we're going to go on the Alaskan cruise this next 2 weeks. And you're kind of like, whoa, this is a different narrative.
And then people looked into the documentation associated with the deal and what quote unquote perks were allowable inside of like the corporate charter. And there were some things that raised questions, private planes, compensation that seemed to be outside of, what people would find a reasonable.
I didn't know any of that. I wasn't aware of that.
Yeah. So for sure, that was a meaningful part of it. So the issues with, we may sell Bitcoin from time to time. Well, coming from Bitcoin magazine / Bitcoin conference / the OGs of Bitcoin, that seemed like some version of what am I looking for here?
Capitulation.
Literally the opposite of what you would think would come from that group of folks. And so then the share price started to move in a very an uncomfortable position. So then shareholders started to look at, well, what did I really get into here? Because it's getting close to where this isn't worth it for me. Then they looked at the charter, looked at the perks, looked at the compensation, looked at who owned what, looked at who controls what, all those things. Okay, that's red flag number 2. Because
was this all in Eric's article that he wrote? Didn't Eric come out?
I haven't read that article. I just know that has happened and has been part of the narrative.
Eric, what's Eric's last name? I can't pronounce it, or I can't remember.
Belchunas? Him?
Yeah, Belchunas. Yeah, he wrote an article that is kind of going viral right now about the whole thing.
So then there was that, like, okay, this looks like an enrichment process. It looks like they did this transaction to quote unquote enrich themselves. And then you've had 6 months of the price of Nakamoto just absolutely crashing. Yeah. Like, I don't know what it is today, but last time I looked,
he's like 26 cents or something.
Oh my Lord.
And it was
last time I checked, it was 90 cents.
Yeah, I last time I looked, it was like 55 cents. Right?
Yeah, I think the peak was $27, if I remember correctly.
Yeah. So now you have, and then at literally the bottom of their stock price, they announced that they are going to acquire 2 businesses that are directly tied to David Bailey, and
they're not directly tied. It based upon what there is in the article. David stepped down from BTC Inc.
Yeah,
and then within a week, it was acquired. And so there is the problem that everybody's having, and the article does a good job of talking about it, is like that the public shareholders are now buying David's companies, UTXO and BTC Inc. And there's really no third-party evaluator in that process that we know of. Obviously, this is all speculation, and we'll leave the benefit of the doubt to David to come out and kind of address it and talk about it. But from what the article writes, it's it's like, not an arm's length transaction is, I guess, the best way to put it, or maybe technically an arm's length transaction, but not in the spirit of what a true arm's length transaction looks like. And so, there is, like Andrew said, you find out a lot in bear markets because it puts pressure on every model.
Yeah.
And when pressure is applied, you have outs that you take, and those outs can be looked at or have court of public opinion attached to them. It's like very similar to what happened with who's the company that sponsored the VIP breakfast on Monday, Andrew? I mean on Friday of last week. Barry Silbert and that whole thing.
Yeah, right.
He was under the heat for a long time. People did not like what was going on. There was a public, very public back and forth between him and the Winklevoss twins. And then, it was one of those things where he was able to make it out, and he's back on the horse now. And, David may find himself there, and I don't know what the future holds for all of these treasury companies, but it definitely is, they're under the gun. I mean, based upon my math, I think they're down 99%.
Yeah. I mean, there are right ways to, handle, when you're handed a set of circumstances that probably require meaningful humility, maybe you should lean into that, right? So the idea that it's very unself-aware for you to start a Bitcoin treasury company and you to wildly outpay yourself and additional staff, wildly outperk yourself and additional staff based on what the thesis of Bitcoin and the Bitcoin community kind of is founded upon, right? It is founded upon and was an outgrowth of the financial crisis that bankers in Wall Street, it's all somewhat, a bit on the tape, right? It's a bit self-dealing. So
I don't blame him for that. That's Wall Street, man. Like, look at all these guys. These investment bankers are ruthless. They're all in it for themselves.
I get that. But if a different track was taken, right?
That's just business choices, though, right? I don't blame him for his business choice. He's going to eat the ramifications. He's eating his own cooking. You know what I mean? I think I think what you're saying is true for true Bitcoiners. Like, it's sad to think that the Bitcoin conference is dead. And we'll see how this one looks. But, I see a lot of speakers being added that are XRP maxis and, all sorts of stuff that just is very different than how it started. And
I heard that Arch Public was going to be the new Bitcoin conference leader, kind of putting their own thing out there.
False. That is not our bag. I don't know who you heard that from, but it is a lie. What I can tell you that Arch Public is very excited about doing. We had over 120 customers come to New York, and we had a lot of fun with them. It was, it's been needed in our space for a long time, like face-to-face fellowship, and. We are interested in doing that. We love community, and we love the Bitcoin community in particular, are a bunch of forward-thinking, risk-taking, cut from the same cloth type individuals as we are. And it's fun to have like-minded people discussing big ideas and actually seeing them come to fruition. Like that's awesome. Yeah, but the Bitcoin conference is, it's more of a billboard, I would say, for Bitcoin. And I don't know how effective the message on the billboard is anymore, is I guess my point. It's a big billboard, a lot of space on a major highway. Everybody sees it, but you go and you're left with kind of like, man, this is a carnival. And I don't know how much it has to do with Bitcoin, to be honest with you.
Oh, and this is the same thing that, Gary and Grant have been saying, Gary, especially for a while, but Grant, since he's really gotten kind of into Bitcoin, is this idea that Bitcoin's marketing really, let's face it, sucks. Yeah. Right. No matter which way you look at it, it really does suck from the viewpoint of how do we get more people involved? How do we get more people to take it seriously? And I don't necessarily disagree either.
Well, I would agree. And if you think about why that messaging is so poor and why the marketing is so poor, is because the loudest voices in the room have the shortest perspective. They're all about the money grab right now. They're all about creating it's like the plate of fajitas that comes out of the restaurant that passes by everybody's table. Everybody goes, well, I want fajitas, and if you are only focused on that, then you're not focused on how good the fajitas are. That's very different than if someone eats the fajitas and goes, that's the best plate of fajitas I've ever had. And they come back for the taste, and they come back for the service, and they come back for the entire value proposition that restaurant gives them. That's real business, right? Yeah, I had a jeweler teach me this lesson early on when I was buying my engagement ring for my wife. He said to me, I was in college. I never heard this before. He said, I've made a decision to make a little bit of money to earn your business over a lifetime. There's plenty of jewelers that want to capture a lifetime of profit in the first transaction. Yep. And that's true on everything. It's like what you want to find. You want to find that good relationship where they care about you coming back. Yeah. And they care about how you come back in terms of, what you think about them, what you feel about them. And that type of stickiness is few and far between in the crypto space. It's like, what have you done for me lately? Look at Pump Fund. Pump Fund was on the tip of everyone's tongue, and it's all but dead now. It was the biggest flash of fajitas. Everybody ordered them, and everybody was like, man, those suck. That tastes like garbage. You see what I'm saying? It's like,
Pump Fund, it still exists, but Nifty Gateway was a huge name. Back in 2022, if you were an artist or you were doing anything with NFTs, you were begging to get on Nifty Gateway.
Oh, yeah.
Begging to get on Nifty Gateway. It got shut down 3 weeks ago. It doesn't exist anymore. It's gone. So back to the sort of Nakamoto thing, like you think about it for a second, and somebody just mentioned OpenSea. And same thing with OpenSea.
Same thing.
So you go back to Nakamoto and your Bitcoin magazine, your Bitcoin conference, your UTXO. My guess is given the amount of Bitcoin that went through those hands and probably stayed in those hands, given that they've been in this space for a really long time. The question then becomes, why choose to get happier than happy, right? Like you can still run the Bitcoin conference business and make a pretty good number each year. And by the way, they've got like 4 of them globally. There's the one in Vegas, but there's one in Prague, and there's one somewhere else, and then somewhere else, right? So it's got a great conference business. You're running Bitcoin Magazine, good business. UTXO, good business. So is there a material difference? You talk to quote unquote rich people, right? What is the difference between having 50 million bucks and 72 million bucks? Does it make any meaningful difference in your life? No, it doesn't.
Yeah.
So that's the
well,
question.
You talk to the top guys,
yeah,
and they'll tell you reputation is priceless.
Yeah. Right.
They'll tell you, I'd rather fall on my sword and rebuild than to have to essentially, have people calling me bad or set a precedence against my character and or against my reputation. Just to put it in perspective, these are shocking numbers. Nifty Gateway started in 2021. Mm-hmm. In their 5 years of business, they did $1.2 billion of transactional business. And they're out of business today.
That's crazy.
Yeah. And they probably did 90% of that $1.2 billion between 2021 and the end of 2022.
They did.
Yeah. And by the way, they were acquired by Gemini for probably a meaningful amount of money, right?
I would imagine so.
Here's the thing. Like the people that started Nifty Gateway probably made whatever the number is from that transaction with Gemini. Are those people making lots of noise and trying to do all sorts of other things or have they decided, you know what, maybe I'll do something else later, but for right now, I'm going to just cool off for a few years. You see what I mean?
Yeah.
There are different ways to handle the process. And, Nakamoto can keep fighting this fight, right? They can keep going to the mattresses. But there's also an alternative that probably would play extremely well with the Bitcoin community. And that's to just retreat. I mean, that's just retreat. Hey, we gave this a shot. Wall Street isn't where it's at when it comes to the way we think about how we do things and our real commitment to Bitcoin. You would probably be shocked as to what the response would be. I don't know if they've thought about that. Maybe they haven't. Maybe they have. Maybe they're too in there, in the silo and
I think that's a classic example of being blinded by the light. It's the spotlight is very, very. You never know how you're going to respond to it until you're in it, truthfully.
Yeah.
And so these treasury companies became the nifty gateways. They were the surge of energy and power that we've seen. Well, that's a hell of a spotlight, and that's really hard for some people to navigate through, and not to, it's always like pressing more and more instead of finding where the world sees you from a value perspective and leaning in and owning that. You see what I'm saying? Like if people are seeing value in something that you're doing, like we all were in the Bitcoin conference, you reward those customers, like grow that customer base, focus on those customers and delivering to them the experience that makes them come back and happy to come back. And I will, go ahead.
No, it's also a lesson that probably should be learned by people in the space that build businesses. There are alternative ways to raise capital or consolidate capital, across capital markets. By the way, notice I didn't say public markets. Public markets are part of capital markets, but they're not the end all be all of capital markets, right? So let's take an idea in a company that most people know, like Monster Beverage, right? Monster drinking the Monster drinks, right? So Coca-Cola bought like 30% of them at some point. And then it continued to go well. And then they bought like 49% of them at some point. At any point, given the scale and excitement and all that stuff, Monster could have said, we're going to go public and we're going to, raise another $300 million, right? But instead, ultimately, I think now Coca-Cola either owns all of them or most of them. And that was enough. That's capital markets, right? So there's a lot of money in private capital markets, sometimes even more than in public markets, with a meaningfully different set of circumstances that you have to answer.
The rules are totally different, right?
Yeah, totally different. So, it is a, you make decisions and you go down a road, and oftentimes it's not the road you thought it was, right?
Yeah, and so let's go in continuous. I mean, we're talking about, treasury companies, Nakamoto. We're talking about capital markets. Let's go back to strategy. Everybody's kind of, anytime something happens to another treasury company, or heaven forbid, Saylor just says anything, right? It's all this, strategy's so terrible. And right now it's really getting to this point. First of all, I don't think people understand how they've changed their approach, where they've gone from where they're moving from that debt to the equity to buy Bitcoin. But then people are bringing up dilution, right? And this is something somebody had asked about on one of my posts here this week. They're like, well, but man, they're diluting my shares and whatnot. And I had to step up and say, hey, listen, dilution isn't necessarily going to be bad if the asset that you're buying underneath increases at a greater rate down the road, right? So, people automatically are assuming, a lot of retailers automatically assuming that just because a strategy is selling preferred and whatever stock to buy the Bitcoin, that they're getting diluted. That's it. But
there is some truth to that. Like if Nakamoto dilutes at this rate, which they are by purchasing this, you're diluting at a 99% discount.
Yeah.
Like the wherever your cost basis is, wherever the new dilution point or the new purchase price is, the wider that gap, the more you're diluted, period, the end. And so
Right.
it begs the question is like, why can't he spread that risk out on the purchasing curve a little more? Why can't there be, why is there so much concentration risk to his orange dots? But riddle me that. You see what I'm saying?
Well,
Like what, these are not
right.
sophisticated things that Wall Street doesn't understand. Why is he announcing these big slugs at one point in time instead of making prudent DCA purchases? And I have to believe that it's for the headlines. And I don't agree with
Probably.
that.
Yeah.
I don't agree with that. I think that's a poor way to schedule your purchases based upon how big of a market response you're going to get in terms of headlines. I don't think that's doing, I personally, my opinion, don't think that's the best way to enter and to pick dilution points for your holders.
But at the same time, at the end of the day, as long as your timeline when you're buying strategy, right? As long as that aligns with that longer time frame where Bitcoin's price appreciates faster than your slices is becoming smaller, I mean, you still end up winning, right? I think the issue becomes if you're a shorter term trader in it, maybe, or a shorter term holder, and you're, maybe you decide
but you don't carry that same risk.
Solution.
But you don't carry that same risk in holding spot is the point that people are making.
Well, that's right. Yeah. Now that's right. But my point is just to the dilution is bad, period, end of sentence. Maybe it's not favorable, but again, it's not necessarily end all be. It isn't just because
it doesn't mean you're it's a losing
right.
position. No, I agree with you there.
Right.
Bitcoin, if anything, it could outstrip all that, right? And give asymmetric returns beyond that dilution. But it still begs the question is like, why wouldn't I just own Bitcoin? I can't be diluted in my equity stake in Bitcoin. If I own one Bitcoin, I'm never going to wake up and go, oh, crap, I only own 0.85 Bitcoins
So it falls
today.
back on the investor to figure out, okay, what am I actually doing, right?
That's right. And what am I using these vehicles for? And I would argue that everything that Saylor's created to date has been created for not retail investors, and yet primarily that's where the money's coming from. That is a disjointed expectation, in my opinion, and you're going to have a lot of unhappy customers. There's unintended consequences with all of these things, and so it begs the question at the end of the day: do people understand what they're getting into? And when the crap hits the fan, who do they blame?
And I think it's nobody, right? I mean, they don't know what they're getting into. I think that's the biggest takeaway.
Well, and there's just tremendous value in, a heavy focus on operating a business or the business, right?
Yeah.
A heavy focus on, day-to-day operation that doesn't necessarily have to be so distracted by so much noise, surrounding a public share price, right? Yeah. Take a look at Gemini. Gemini's going through the same thing right now. They've laid off 25% of their staff. They've shuttered 3 locations across the globe. By the way, 2.5 years ago, the Winklevoss twins were doing globe-trotting videos of being in these locations, talking to meaningful politicians to secure licenses for those places. Those are gone. They just basically broomed their entire C-suite. When we find ourselves in bear markets,
to focus on prediction markets.
Yeah, right. So you just, bear markets are going to, the tide is going to roll back, and you're going to figure out whose swimsuit was tied tightly or not. You're going to find out really quick, and so we're seeing that right now. Juxtapose that versus institutions like, here we go, BlackRock, who started their second, Bitcoin fund, and they made public their BITL portfolio, which has a bunch of, layer 2s and layer 1s in it. And they're launching it in conjunction and partnership with being able to trade it on Uniswap. Right.
I agree with you on the BlackRock reference, but I don't necessarily think it's a pure apples to apples. I think BlackRock can be successful in whatever they want. I think Bitwise would be a better example of that, where they're only this, and they've seen phenomenal growth. I mean, they're turning into a behemoth. You know what I mean?
Well,
and
they've
they're not
gone
doing
through-
it on the back of like smoke and mirrors.
Right.
They're not doing it on the back of a bunch of disjointed expectations. They're delivering what they say they're going to deliver, and the clients know exactly what they're getting, and they're all happy with what they're getting because the expectations are aligned.
And Bitwise has been very careful about tapping into capital markets.
100%.
They've done it a couple times. They operate the hell out of their business.
Yep.
They send staff to talk to 20, 30, 105 advisors across the country every single day.
I would argue Matt's one of the most accessible CEOs that is at that level. You know what I mean? It's like you could literally DM him and he will hit you back and go and talk to you and want to find out.
Again, Matt's the CIO. So,
CIO.
Yeah, but for Bitwise, I mean, that's kind of
pretty much
a bigger position. But yeah, I mean, he is everywhere all the time, and he's always in a different location. Not because he's doing another podcast or another conference deal. Those always coincide with meetings with another RIA, meetings with a wirehouse, meetings with a regional bank, meetings with any place that's got a functional wealth management structure.
Real builders. They're real builders. They're putting block on block. Yeah.
So think about this, though. How many times do you think investment banks have come to Bitwise and talked about going public over the last 18 months?
Tons.
70 times, 80, an immeasurable amount of times. Why? Because investment bankers are in the business of doing those types of transactions. It makes them a lot of money, and Bitwise is probably a cash cow and looks really great, right? They make all the sense in the world. But they've decided, they probably don't use this phrase, but internally decided, you know what? We're happy being happy. We don't need to get happier than happy. We're running a great business. Let's keep running the business. And until it's overwhelmingly obvious to us to make that move, and it may never be, then we'll just keep running the business.
Well, for builders, typically that's when they can't help the vision anymore. Mm-hmm. Like the vision has outgrown their capacity to keep running it. I don't see that happening with them anytime soon. Those guys are all as capable as any human beings I've ever come across. And so I do think that's the reason why they're holding their water. They're like, we're capable. We've got a great team. We're building products that the market's responding to. Like you said, we're making money. All those things point to them being in control of their own destiny. Sometimes when you go to the public markets, you lose that, right? You start to, the old saying, you can't serve two masters. So if you're a builder and you're a founder and you're a visionary, that's your master. And that is where it should be. Your master should be the entity. It's the old King Solomon. Like if the entity is the baby, you're the one that wants it to live and survive and thrive more than any other human. Once that's lost, there's a lot of risk that is injected into that business model that you can't account for, can't quantify, can't risk adjust for. Like so I just think they know where their lane is, like you said, Andrew, and they want to swim in it and they just stay in it.
And to Andrew's earlier point, when you're running a business, are you doing it? Are you paying attention to how you're running it? Are you doing it the right way? Right. So again, you compare Bitwise and what they've done up to this point and accessibility. I mean, I've never been able to speak to somebody like Hunter or Matt as easily as I can do, or even back when Jeff was over there doing his thing, and their other guys, it was still simple. And so they're doing the things they need to do and they're benefiting from it. I mean, their business, like you said, is just continuing to blow up and to do extremely well. And so when you're on that point, I think at that point, there really is no reason to have to go public with it, to have to do all that. You're doing what you need to do. You're getting the response that just encourages you to continue doing that. But yeah, I think you're absolutely right there, Tillman. You kind of get that point and you become public, and then all of a sudden you're like, well, now it's different, right?
It would take you guys, because I know Tillman is a power user at this point. Go and ask some questions about capital markets to Grok and the difference between the scale of private funding and private deals where capital markets are taking a position, but it's not, they're not taking the company public. It's not gotten to public markets. That shift over the past 15 years has been enormous, like absolutely enormous.
Well, it's why Kathy Wood, all those people exist because that market's so big.
To this day, there are still some of the biggest companies on the planet, like Stripe. Stripe though isn't huge public, right? Insane. SpaceX, not public, right? So there are huge entities that have delayed going to public markets because they are happy operating and taking in capital from the private capital space. It's been a meaningful big shift. There's been innumerable amounts of articles written on the shift and change associated with capital markets, public versus private. I'm certainly not the authority on it. I just know that there's a lot of data out there that would surprise you. So in other words, crypto companies, crypto exchanges, the Nakamotos of the world, for some reason deciding to go public. I just, I don't know. I don't know why there was this rush to go do it. Maybe because, again, the regulatory rails were off, but that would seem like a space where you could really
Andrew, the answer is right in front of you, but it just requires you to assume the worst in people and not the best.
I'm not happy with the $10 in my wallet. I want it to be 200s, right?
Well, hey, listen, I think people who play, if you talk to any investment bankers, this is their game. This is literally how they pitch it. Liquidity events, large liquidity events. For the owners of the business, it's no different than, David Bailey selling out BTC Media or BTC Inc., to Nakamoto and doing what he's done is very similar to an OG dumping his Bitcoin. It's just they're taking their money off the table and they have a right to do it. They have been kingpins in the space and they want to be handsomely rewarded. They want to put that check in the box. Now, to your point earlier, that means different things to different people. The check in the box for me is different than the check in the box for you. And, for whatever reason, the vehicle that has been presented to David was a very attractive vehicle for him to put the check in the box. And I don't know what the economics of the deal look like. I don't know how much he walks away with. I don't know any of that. I just know that money is a motivator, and exit money can be a massive motivator. So, I don't blame them. I just, again, know that, your reputation precedes you. I look at it like being a college football coach or a pro football coach, right? There's coaches that I can't stand. Cannot stand. Lane Kiffin is one of them. I can't stand Lane Kiffin. I don't care if he wins 10 national championships for LSU. LSU deserves them and whatever comes with them. You see what I'm saying? And I think that it doesn't mean he's not a great football coach. It doesn't mean I'm saying he can't win the national championship. I'm just saying, as a football player, I wouldn't play for him, or I wouldn't want to play for him, And so there's just different ways to get to the summit. Some guys go to Everest and they treat the Sherpas like family, and they are friends for the rest of their life. Some guys go to Everest and treat the Sherpas like the concierge at the front of the Ritz-Carlton Hotel, and the Sherpas hate them. Yep. They're both climbing Everest. They're both doing the same thing, but it's about how you get there and what your modus operandum is, getting there. It's
guys, I got to jump. I got a delivery and I got another call at 1:00. So,
all right, man. We'll catch you next week.
You bet. Thank you.
Sure enough, man. So it's hard for a lot of people, right? Because what you said is true. It's his companies. He can choose to exit. As long as it's all done, correctly and arm's length and whatnot, then, it is what it is.
Well,
But
I mean,
think,
for what it's worth, I don't know the ins and outs of the deal. I know the
yeah,
article I read from Eric, and it sounds like it was he told everybody he was going to do this at some point. This was not hidden, or so even if it wasn't as arm's length as we think it should have been, the fact that it was literally publicized that it was going to happen makes it doesn't really matter. You know what I mean? Everybody kind of agreed to it by definition and getting involved. That doesn't mean it's going to make everybody happy. It doesn't mean that there's not reputational risk involved. It doesn't mean that they're having to sit over there and do damage control today, I guarantee. Whether they want to or not, if they care about, public perception, they've got to respond to these types of, allocations and articles that are being written. And that is the burden of doing these types of transactions, right? And that may be a cost they're willing to pay, and it may not be,
especially if the FU money is really up there, right?
That's what I'm saying.
What
there's plenty of
The
people.
Gambler, is that what it was? The Gambler with Mark Wahlberg and what's his name? Big guy, John
Cena.
Anyway, he plays the gangster guy, and he says, it's all about the FU money, right? And so, I think
people think that it is. People think that it is. Have you ever met FU money that got there the wrong way?
Yeah.
They have no friends. They're miserable people. They are looking over their shoulder all the time. And I'm not saying David did that by just for clarifications, but I'm saying there is a very slippery slope there that if money is who you serve, you can't have the two masters. You can't serve people and money at the same time, because money is a zero-sum game.
and so at the end of the day, again, it comes back to what we were talking about earlier, which is you have to understand what you're investing in. It doesn't mean there's not going to be surprises along the way, but way too many people I'm talking to, these days are just jumping into things like strategy or NACA. They jumped into NACA.
And they're saying it's a Bitcoin equivalent. It's not a Bitcoin equivalent. It is very, very different than Bitcoin. Again, if I buy Bitcoin, I have that many Bitcoin forever. If I buy NACO shares, I have this many Bitcoin today and this many tomorrow and this many the next day. And depending upon where those dilution points are, my status as a Bitcoin holder is fluctuating. It's not a static, position. It's a dynamic position. That's very different. And so you should understand that. And I will tell you, just from a personal perspective, I got into Bitcoin to get away from this type of malarkey. You know what I mean? There was a very simple, truthfully though, the thing that I loved about Bitcoin and the reason why I fell in love with it is that as long as I just put my computer to work and mined it, the network treated me fairly, treated me honestly. I never was cheated, and that type of purity in terms of the offering meeting expectations is what I think drew a lot of people into Bitcoin. And so to see the difference between the private, equities markets and what they call Bitcoin versus what Bitcoin calls Bitcoin, I think that is where the heartburn comes. And I think the people, but again, you're going to get that in every instance. Even the ETF space, it's not holding Bitcoin.
Yeah.
It's not. You can think it is, but it's not. It's not the same as having self-custody Bitcoin.
As you holding it yourself.
Yeah, that's right.
Because now, the ETFs they're actually holding Bitcoin. Let's not let anybody think they're not, but
they are.
You yourself are. You're holding shares in that ETF.
That's exactly right. You're still holding paper, and you have trust in the people that have given you that paper. That is different than holding Bitcoin. So there's this rainbow, this triage of different products, different risks, different rewards. All of that stuff is being built on Bitcoin, but it's very different than Bitcoin. And you just need to know that if you're somebody who's expecting to grow your Bitcoin stack, and that's what you want to do. I said this from the stage at New York. I said, I like waking up every day knowing that I'm going to have more Bitcoin than I had yesterday. Well, you can't say that about the public equity markets. So,
Yeah,
if that's
exactly.
what your goal is, you shouldn't look at that as a vehicle to achieve the goal, because it's not built to achieve that goal. It's built to play the volatility of the markets. It's built to harvest yield on that volatility. That's what it's
Well,
built for.
and that's a great point there. And I know we're getting to the end here real quick, but something else I had talked about earlier this week on X was this idea that, everybody kind of focuses on the on-chain metrics for Bitcoin, but there's a lot of reason why those maybe aren't such a great thing to watch anymore, because we have so much of the of those other products on top of it. Think about options on IBIT, right?
Well, which one's the dog and which one's the tail at this point?
Exactly. And the more you're getting up there in an opaque area, which is all these derivatives, at what point it's not necessarily the derivatives are bad, but at what point do those derivatives exert extra, much more force on the volatility and the price than spot does? And, you can't measure
we
that
have the
because
same, it's the same as we've had in the past, in the form of there's a new market maker, right? The miners were the market maker in the past. Like when I first got into Bitcoin, you didn't have to know. You knew where the price was going based upon how many miners were selling versus how many miners were holding. And when the miners all started selling, it was a very, very powerful avalanche of every other miner selling, right?
Yeah.
And part of that was due to capital raise needs to buy more equipment for the next iteration. That was 4 times more. Like there's a lot that goes into that, but nothing dictated price more than those miners.
Yep.
Now, then you go to like the period of time where the price was dictated by the exchanges. And they if you offered the ICO or if you offered a coin, then it went up in price. Yeah. And I just remember thinking, like back in 2017, the whole game was trying to figure out who was getting listed on Coinbase.
That was the whole game. Absolutely it. Yep.
And if you were right, you got paid handsomely for that risk. But if you were wrong, those projects just crashed after that, right? And so now the market makers, not the exchanges. Now the market makers, Wall Street. Yeah. And they control price. Now here's the good news. There's a checks and balance here. If they manipulate price so much so that the value proposition on the spot market becomes unignorable. For example, let's just say they drive the price down to $25,000, $20,000 a Bitcoin. I believe you will see a lot of people buy physical Bitcoin and put it in a wallet because it's too good of an opportunity to pass up. If it's at 20,000 and you believe it's going to 200,000, you've got a 10 banger in that wallet. Yeah. But you just have to set it and forget it and wait until the sun shines. You know what I mean? And so there is a natural balance of power between the networks, the Wall Street network and the Bitcoin network. But don't get it twisted. Yeah. The price is controlled by the most liquidity. Yeah. It always is. And Wall Street's got a lot more liquidity than the exchanges do at this point. And so unless you have major exchanges being market makers, which they don't want to be with any more risk than they have to incur. And let me give you an example of that. It's like being a silver dealer right now. Go try to sell silver to a dealer. Depending upon how well capitalized their business are, they're a buyer or they're not. And it has nothing to do with the fact that silver is fungible. It has to do with the fact that they don't have cash. So if you look at exchanges that aren't wanting to risk their cash by being market makers and holding large quantities of coins so that they can provide that liquidity, then they're looking outside for that liquidity. And market makers that come in and provide that liquidity, they have interest too. They want to drive the price wherever they want to drive it for their own purposes, right?
Exactly. I think probably one of the biggest things as we kind of get to the end here I hope that most retail is going to understand is prior to institutions getting involved and we're able to build all these derivatives products and whatnot on top of things like IBIT and whatnot, before that, it was all about flushing out holders, right? It was all about getting your hands on the coins. These days, it's much more about flushing out leverage. So, it's basically yield farming. I mean, to an extent, right?
Well, it's still the same game, but here's how it looks now. They cripple the price, accumulate physical. They pump the price on paper and cash out the paper. That's the game. And then when they take that paper profit and they crash the price and they buy more physical. And if you're trying to accumulate a large position of Bitcoin, that's the only way to do it without just, chasing green candles, basically. That's a good indicator of who's buying right now.
Yeah. Yeah.
That would be my thesis, right?
Absolutely.
Yeah.
Well, anyway, man. Hey, listen, I appreciate y'all being back this week. We missed y'all last week. I'm sure everybody missed us. Yeah.
It was worth it, but we missed y'all as well. I always love this Wednesday show.
It's so much fun, right?
Yeah. Well, there's no script. We can talk about whatever we want.
Absolutely no script. I sometimes try to give a headline and hope to steer y'all in that direction. And Andrew especially will just be like, nope, we're going to go over here. And I'm like, okay.
Well, I'm not kidding. We literally get on backstage 3 minutes before the show starts.
Yep.
Go.
Let's go and see what happens. Let's just throw it all into the pot and see what comes out. Right?
Until recently, there's not been a shortage of things to talk about. I mean, now, I don't know what the numbers on Twitter look like, but I can feel that there's a lot of people that have, quote, given up on the market or given up on the space.
Yeah, there's a lot of less engagement out there on X especially. And, it is what it is. Again, something I talk about all the time, fair weather traders, right? It's people that are interested in an asset as long as it's going up. But the moment it starts going down, they're like, oh, no, I'm getting bored. I'm tired of it. That's what I was talking about at the beginning when I said the big guys out there are kind of saying, oh, I'm out of it now, and trying to drum up some kind of interest to get people in. Because if they just say, hey, listen, Bitcoin's going down further, people are like, well, I'm tuning out. I'm out until it starts going back up again.
Which is nuts. Think about that mentality. It's just so crazy.
But that's exactly what I do at TexasWest Capital and what y'all do at Arch Public, which is help people understand that, listen, if you're going to really be in the markets, let's make some money when it goes up. Let's make some money when it goes down.
Well, I think forget like software and what Arch Public and we're doing is fantastic. And it does remove all the emotion and it does make you available to trade 24/7, 365 to respond to those conditions. But truthfully, the expectations always come with knowledge. Yep. And what you're doing over there and teaching people to move counter to the trend, that's where trading is. That's where you find peace in the bear markets. Yeah. A lot of people are in turmoil right now. If you're in turmoil right now, there's a major shift in your strategy that needs to take place, truthfully. And I'm not saying that like to cut you down. I've been there, but over allocating and is a major problem. And a lot of people don't even know what that means or what it looks like. But let me give you an idea just briefly. For all of you guys that have been 80+% invested in Bitcoin, right? When Bitcoin makes runs up to 126, wherever your cost basis is, I'm assuming you had a good run. Let's say it's a 3-banger, 2-banger. That's what you call a mean deviation, right? You've got a price that's pretty steady, and then boom, this explosion, which we had, year before last. Well, when that takes place, it's always a good idea to take profits and to go buy a loser with them. Why? Because if you diversify, that's your first step in diversifying your portfolio, right? If you're overloaded in one asset, you're going to ride the roller coaster of that asset's price curve. Yep. If you diversify and you're equally spread out against assets that you really believe in, you're just waiting for the one that has the sun on it. And then you sell parts of that and you roll it into, and you just keep building this diversification. That's how you win all the time.
Yeah,
right?
Exactly.
Imagine going to a horse race. And here's what people don't get. One winner, if you played silver the right way, you could have 10x'd silver this whole run. You're 10x'd your money. So if you have 5 things you're diversified in, and 4 of them drop by 50%, and 1 10x's, are you ahead or behind? You're way ahead. So you just need one good one. So why don't you spread your risk out and put a bet on every horse? If you could go to the horse track and they were paying 20-to-1 odds or 10-to-1 odds, and there was only 5 horses racing, you just bet on every horse and just every race. Just keep betting on horses. One of them's going to win.
There you go. There you go. Hey, man, really, like I said, glad to have you all back again this week. We'll be back again next week, folks. I'll be back on Friday. I think Fibo's going to be with me this Friday. I'll have to verify with him on the market breakdown. So be sure you guys check with that. Other than that, check us out. Check them out over at Arch Public. Check us out at TexasWest Capital. Either way, we'd all love to have you being a part of it. But, at the end of the day, just do something other than trying to do it on your own. I'll be honest with you. I had to learn it the hard way. Very, very few people actually in the markets do it on their own and are successful. Maybe you're lucky, maybe, but most of us aren't. Even if you are, it's going to take you a lot longer to do it than if you're getting some guidance along the way or having tools that can help you intelligently DCA into something that you have a very long-term, especially focus on. So
yeah, there's wisdom in a multitude of counselors.
Absolutely, absolutely. As always, remember, the only thing Tillman can control is how much he loses. You see what he did with his beard, right? And his mustache. This proves it, okay?
It actually proves the opposite. I couldn't control how much I lost. I lost more than I wanted to lose, and I didn't have any control over it, Chris. So this is where that saying dies.
Always a good time, buddy. Hey, we'll see you next week. We'll see y'all next week. Follow us on X. We'd love to have you there. Of course, if you're on YouTube, you can see our X handles down there. Texas OL 60, what? 67.
61.
I want to say 67, man.
Yeah,
I just want to say 67. But anyway, 61. So that'll get you Tillman there. AP_Abacus will get you Andrew. And of course, TXWest Capital will get you me. So follow along, comment, leave likes, all that fun stuff. Share us with your friends. And we'll see y'all next week. Take care. Thanks a lot, Tillman.
Trading tip: always manage risk before chasing gains.